Good afternoon, everyone. My name is Joe Reed, and I am the Vice President of Sustainable Wealth Management and Impact Investing at Vancity. And I'd like to welcome you all today. I'd like to first take a moment to acknowledge I am joining from our head office in downtown Vancouver. This is the traditional territories of the Musqueam, Squamish, and Tsleil-Waututh Nations. They have been the custodians of this land for thousands of years, and I'd like to pay my respects to the elders past, present, and emerging, just out of pure respect. So today, and welcome again. So today we are hosting this webinar on new opportunities and risks, and it's about investing in environmental, social, and governance, ESG, and then artificial intelligence, which is AI. And I had said with our team that, when I look at the questions I used to get in working in the wealth management area, it used to be always around the market. Now I'm getting more and more questions on a regular basis around ESG and artificial intelligence and how that impacts those around us. So that's what this webinar will be about today. The webinar will be recorded and is shared with all of the registered attendees, and it will be posted to our YouTube channel following the event. If you haven't already, please make sure you do follow Vancity and Vancity Investment Management on YouTube and our various other social media platforms. LinkedIn, as an example, we have our Vancity Investment Management team site or team page there. And on all our social media platforms, it helps you to stay connected and get access to the great content that we do, not only in this webinar, but in others as well. And finally, we'd encourage you to engage with us throughout the webinar and take note of what's the most valuable and what's most helpful to you. The question and answer button that you will see allows you to submit questions at any time, and we'll be answering these questions following our presentations. With that, I'd like to introduce you to our speakers. So first, we'll hear from Edmond Ho. Edmond is our Senior Environmental, Social, and Governance ESG Analyst at Vancity Investment Management. He joined Vancity Investment Management in January of 2022, and he has over 14 years of experience in the financial industry. He's a senior ESG analyst, and he's responsible for assessing the practices of publicly traded companies that we invest in on behalf of our members to determine the investment eligibility, evaluating developing trends in sustainability, and then also supporting the execution of shareholder engagement and the overall ESG strategy of Vancity Investment Management. You will also hear from Charan Sanghera. Charan is a senior associate portfolio manager at Vancity Investment Management. He joined us in October of 2021. He works predominantly on our equities team, and which is, for those that are wondering, equities are the stocks that we invest in the portfolios, and he has over 10 years of experience in the financial service industry. He joined us from the British Columbia Investment Management Corporation, which manages a lot of pensions within the province, where he worked on developing and managing a U.S. small cap or small company portfolio back in 2019. Prior to working at BCI, the pension company, Charan worked in a sell-side research. Sell-side is when we're actually doing the research on those companies that we are going to be selling at RBC Capital Markets for over 5 years, with a focus on Canadian diversified financials and North American forest products. He also has the experience of being in a member or client-facing role, which actually creates a really great area of expertise for Charan. So with that, I am going to turn this presentation over to Edmond to get us going. Thank you, Edmond.
Thank you, Joe. I think hopefully everyone can hear me. I can see myself there now on the screen. Yeah, good afternoon, everyone, and thank you for joining this call. So hopefully today we can provide some new insights on AI, ESG, and the opportunity that's available in the market. Our agenda today, we'll start off with an overview of what AI is. Then we'll talk a little bit about the various applications of AI used to create value. And then we'll get into sort of the heart of this webinar. I'll talk about the ESG risks and then cover some of the engagement work that we're doing on this front. And then I'll pass the presentation to Charan, who will then spend some time talking about the investment themes surrounding AI. So since last year, we've been hearing a lot about AI, and it is a very exciting development that's going on. But what exactly is it? And that term seems to be tossed around quite a bit. Well, at a high level, AI refers to the machine's ability to simulate the cognitive functions that we associate with human minds. So some examples include perceiving, reasoning, learning, problem solving, and of course, exercising creativity. It's what makes us humans. The concept of AI has actually been around since the 1950s, though, so it's not anything really new. And it was first introduced by a man named Alan Turing, who was a computer scientist as well as a polymath. And the term was coined several years later by another computer scientist named John McCarthy. But recently, though, as more powerful graphics processing units or GPUs became available, this has accelerated development in a subcategory of AI called deep learning. We'll spend a little bit of time talking about that very shortly. And this ultimately gave rise to what we refer to as generative AI. So the next slide shows a graphical timeline of the various developments of AI since the beginning in 1950s. And just some notable milestones to point out. In 1997, I'm sure many of us are familiar with the story of Deep Blue defeating chess champion Garry Kasparov. This was followed in 2016 when AlphaGo defeated Go champion Lee Sedol. Go is understandably to be a much more difficult game for AI to grasp than chess. So that was quite the achievement when that result came out. In between that, though, we were introduced to Siri and Alexa, which we're all very familiar with by now, I'm sure. And then in 2020, OpenAI developed GPT-3, which then ultimately gave us an application known as ChatGPT. But not all AI is the same. As you can see in the next graphic, there are different layers to AI. Here it is, yeah. So as we move towards the inner layer, the complexity and sophistication in data processing increases. And the layer that's really captivated the market currently is this very inner layer called deep learning. And this is where we'll find what we refer to as generative AI. So what exactly is it? Well, generative AI is an AI model. And the next slide, please. Yeah. So it's really just an AI model. And as the name suggests, it generates content. So mostly in response to a prompt. Content can be audio, visual, media, text, code, etc. Now, the difference between traditional AI, as we mostly understand it, which is more used in an analytical context, generative AI has a more creative element. And the most famous example, of course, now is ChatGPT. How it works is it is really an AI algorithm that learns through patterns from examples in large data sets. And then based on those examples and patterns that it learns, it applies them to make future predictions. And so it's more of like a trial and error. As we feed it more data, it gets larger data sets, it's exposed to more examples, it learns more patterns. The AI or the algo is supposed to get smarter and gets closer to what we ask it to do. One of the key attributes, though, about this application, or most generative AI applications, is its high accessibility and ease of use. Unlike more traditional AIs where there's a need for programming language knowledge, generative AI, or at least the ones that we're used to now, don't require any of that. We can use natural language, which is basically what our speech. We can ask it to do things that we would ask another person to do, and it will be able to do that. So this is one of the things that fueled the explosive growth in ChatGPT's popularity. These two graphics kind of highlight how quickly it's caught on. To the left here, this chart shows the number of monthly visits that ChatGPT has received since its mainstream introduction in Q4 of 2022. So you can see that in 4 short months, it went from just under 200 million to 1 billion monthly visits from November 2022 to about February 2023. The chart to the right also illustrates how its growth compares to other popular online platforms. ChatGPT only took 2 months for it to surpass 100 million users, compared to the next fastest growth platform, which is TikTok, and that took 9 months, and then Instagram took about 2.5 years. So expanding our focus a little bit outside of ChatGPT and bringing it back to more AI broadly, there are about 6 ways where AI is used to create value. And those are listed on the slide here to the right. So just very quickly, first one that comes to mind is cost reduction through automating repetitive tasks, minimize latency to do things faster, reduce decision-making complexity with predictive analysis, enhance engagement with smarter bots, innovation by expanding capabilities, and of course, enhance cybersecurity. Now, the colorful table here shows sort of just a cross-section of where AI capabilities are embedded as of 2022 across various industries. You can see that the highest percentage is the fourth column to the right, which is robotic process automation. And so this ties back to the very first use case listed on the right here of cost reduction through automating repetitive tasks. You can also see that natural language text understanding is quite high. That's the column right about the middle of that table. And that ties in with the third use case of reducing decision-making complexity and making predictive analysis. And also virtual agents, which is the last column. That's also quite highly used, and that refers back to the enhanced engagement with smarter bots. So this is sort of a cross-section of how AI is being used across various industries. But bringing it back to the work that we do, that's most relevant to us, how do we see AI being used and applied to ESG? Well, currently there are about 3 applications that we can think of. The first is natural language processing, or NLP, which helps to monitor and analyze news. Now, screening through information to pick out what is useful and trying to make a quality prediction, that's a primary challenge for all analysts, and of course, us included. So naturally, AI could be seen to help with synthesizing new information, weeding out maybe less significant and less material information, and helping to make smarter predictions. Now, particularly with forecasting controversies. With AI's help, we may be able to better predict something going wrong at companies that we invest in before it actually does. We can also see AI helping with regulatory requirements, so that would be the second application. It can be used to generate better estimates for data that aren't being disclosed currently by extrapolating data that is actually available. So in the area of scope 3 emissions, this is still a tricky area. It's a lot of disclosure is still very limited, and it's an area that's quite difficult to measure. We can definitely see AI being very helpful in this regard. Now, another area that we're seeing it being used, more of an emerging use case, we don't currently subscribe to this use, but we can see this being applied to our processes down the line, is employing satellite-based solutions to help improve supply chain data traceability. Now, for example, there's a company called Descartes Labs currently that uses satellite imaging tech to forecast carbon footprint and to track forest and biodiversity loss. With more development, this use case will become more accessible, and the predictions will become much more accurate. And aside from these 3 too, as AI develops, we're also going to see other use cases that will emerge. But currently speaking, on the landscape right now, these are the 3 that we're most familiar with. And of course, with any technology, particularly with something that has such a powerful potential as AI, it isn't without risks. And some of these risks are quite material, and they're not being talked about enough. So the first ESG risk that comes to mind for most people is labor displacement. Will AI actually replace jobs? So in response to that question, the World Economic Forum actually surveyed 803 global large cap companies. And the results of those companies surveyed is that 49% predicts AI will be a net job creator, and only 23% thinks that it will displace jobs. Now, we do have some history to turn back on, and we can refer to. Looking back to history, there's about 3 waves of technological disruptions or industrial revolutions from 1850 to 2015. The most recent one was the advent of the PC. And in that revolution, it was estimated to have created 19.3 million jobs compared to have 3.5 million jobs being displaced. So if that's anything to go on, of course, every new revolution will be different, and it's still kind of to be determined how much of disruption of an impact or revolution that AI will be. It's very likely that AI won't be very much different, that it will turn out to be a net job creator, and not displace as many jobs as initially feared. Unlike past industrial revolutions too, the AI disruption is expected to mainly impact more higher skilled sectors or office type jobs, as you can see on this chart here. So the sectors with the highest exposure are expected to be in the areas of office, administrative support, legal, and engineering. And then as we kind of move down towards our right, the next category is life, physical, and social science, business, financial, operations, community, and social services. So workers in these sectors may be more open to retraining, which will also help further lessen employment loss. Now, Another risk that we can think of, and that's a little bit talked about, is of course misinformation and political polarization. So this is where deepfake technologies come in. And for people on this call who may not be familiar with that term, deepfake is really taking someone's likeness, either their image or voice, and using that to put them into a content that the person wasn't actually involved in. And that can certainly influence opinions or fuel tensions. This has actually been attempted already. So in March 2022, there was a deepfake video of Ukraine President Zelensky that was distributed urging his troops to surrender. Now, luckily, that video was detected to be fake very quickly, just due to the low quality of it. But since March 2022, the level of quality of content, AI-generated content, has increased a lot. So it's just going to get harder and harder to detect some of these deepfake videos. And of course, they can definitely be used for malicious purposes. Now, this is something that we're already exposed to. One of the things that we can fall victim to through an AI algo is that it can determine the news articles or social media content that's being fed to us. If any of us use Facebook, YouTube, Instagram, this is already embedded. It keeps feeding us videos and contents of things that we click on that we interact with. So what this does, of course, is it traps us in an echo chamber of our own opinions, and it further strengthens polarization. Now, if you think climate change is a conspiracy, or you happen to think that the Earth is flat, it's going to keep feeding you content that will strengthen your views, and you're just going to end up not getting a differing opinion, and it's just going to continue to feed you things that you agree with. And of course, that has the effect of strengthening polarization, either in views or more dangerously on sort of the political spectrum. Now, deepfakes, of course, can also pose major issues of privacy and security. Criminals can now use these technologies to orchestrate sophisticated phishing scams or identity theft operations. A lot of times, there's a few companies where you would call up where they would use voice recognition to identify who you are, rather than using a passphrase or a password. Now imagine somebody getting a deep fake of your voice. Well, that can access your personal information that you don't want it to be exposed to. And so that's definitely going to be a very material risk. And companies are really going to need to beef up their cybersecurity to avoid that. Now, another social risk, we're going to spend a little bit more time talking about this one, is that AI can perpetuate or amplify racial and gender bias. Now, earlier I mentioned about how AI models learn. It's through patterns and large data sets. So that follows that AI is only as good as the data that it's fed to learn from. Now, if data that's fed contains institutional racism or sexism, then likely that AI model will end up having some systemic bias. Now, you can also have sample size bias, where the sample where the AI learns is not representative of the population that the use case is meant for. And AI may be very smart, but the algos still ultimately start with one or a team of human designers. And if the human designers have some bias, which we all tend to do, shaped by our experience and environment, then those biases will make their way into the AI model. So here's a few examples. Some of these are through the works that we interact with through our daily work, and some of these are through simple Google search. So the first one to point out I'll want to highlight is text-to-image models tend to generate images of men for prompts such as, quote, CEO. It doesn't, more often it tends to generate a picture of a white male rather than a female or someone of minority of color. Now, AI-based voice-to-text systems in American prisons to monitor inmates' calls are less accurate at transcribing for Black individuals. So this is actually a point that we came to understand through some of the past engagement work. And then we've also had past engagement work on facial recognition. And we identified one of the things that we were concerned with was facial recognition technology has issues with detecting non-white faces. So one interesting stat I want to share is that a 2021 report indicated that only 2.4% of US residents who graduated with a PhD in AI were Black. Now, why is this important? Well, PhD in AI are usually the qualifications required for companies to hire for jobs that for AI designing jobs, the AI designer roles. And so you can see that with only 2.4% of U.S. residents being Black, that's not very representative of the U.S. population or the population at large. And so some of those biases and experiences are going to make their way into the AI algos, and that's going to continue to persist, perpetuate, or amplify the biases that already exist. So now let's move on to environmental risks of AI. Now, the first thing that many people tend to think of is the increased energy use. We saw this with crypto. Well, the good news is AI is not expected to use as much power resource as crypto does, because it just the way that it works, it's not meant to do like hard calculations or the trial and error method. But how much energy is being used is mixed at the moment. Now, a few weeks ago, I gave a similar presentation, and I mentioned that at the time, the concern was not as great because processors will continue to get more efficient, which will help offset the power required. A couple of days ago, there was a report that came out of Goldman Sachs that predicted the energy use was going to grow by 15% compounded annually up to 2030. Well, that's certainly a very significant gain in energy use, and kind of contradicts what we were thinking earlier before that report came out. But that just kind of highlights how things are really quickly developing in this area, and we're all really just trying to predict the future right now, and we can't really know for sure. But we will continue to keep an eye on this, as is very topical. But one risk that we are quite certain of is the water stress risk posed by AI. And this is something that it's quite concerning for us. So data centers use vast amounts of fresh water for liquid cooling. Why fresh water is preferred is because it helps to avoid corrosion or bacteria growth. And so just by way of statistics, training Chat GPT-3 in Microsoft's U.S. data center. So these are efficient data centers. These aren't just any data centers. That can directly consume 700,000 liters of clean fresh water. So to put that into a context that we can all kind of grasp, imagine a bottle of half liter of water, 500 milliliters, and you can sort of buy at a local gas station. That's how much water that ChatGPT uses whenever it's being asked about 10 to 50 questions. We're providing 10 to 50 responses. So going back to the slide earlier, when you saw that there was over 2 billion users in ChatGPT monthly, 2 billion monthly visits. Well, that adds up very quickly with like more than 100 million active users daily. And you can see that how that water stress can become very concerning. Now, onto the governance side, we've already mentioned how deepfakes can be used to orchestrate phishing scams or sophisticated identity thefts. Many on this call may be familiar with the Facebook Cambridge Analytica scandal a few years ago, where 50 million Facebook users' personal data was acquired without consent for targeted political advertising. So again, that was using the feeding these users the things that they are familiar with, the opinions, to strengthen their political views. And so we've already kind of talked about that, but you can see that where this is going. Data leaks can be very, very much more damaging now. As companies tend to, sometimes they do, data leaks is a risk that we all have to deal with, companies have to deal with. And the hope is that they will increase their cybersecurity to protect the user's information from being used maliciously. But it's always going to be a catch-up game. Criminals will always be slightly ahead, and then the cybersecurity professionals will then try to patch those holes. It's just going to be something that we have to be very vigilant on. So one of the questions we really have to ask, aside from the cybersecurity, on the governance side, is how can we ensure companies will act ethically and responsibly with AI technology? This is certainly something that's very powerful. It's going to open up a lot of new opportunities, a lot of new doors. How do we ensure that it's being used in a responsible fashion? Well, before we get into what we're actually doing, there is some what regulators are trying to keep up. So A couple of things here to highlight. In the EU, the General Data Protection Regulation, or GDPR, excuse me, for short, is impactful in protecting data against AI-related risks. Now, the European, or I should rather say, it's the most impactful in protecting data against AI-related risks. Now, the European Commission's ethics guidelines for trustworthy AI has also established guidelines around ethical and legal aspects of AI development. And then in the US, the National Institute of Standards and Technology developed an AI risk management framework in 2023, but it does not provide regulatory oversight. So it may seem like there is quite a few regulations that is in place to protect us, but the one thing to highlight is the bottom point here on the slide is that none of these frameworks have actually been tested in a legal context. So again, it's very early days. This landscape is continuously evolving. The regulators trying to catch up, and we really don't know how it's all going to shake out in a few years' time. So what are we doing as investors? Well, to help ensure that companies we invest in will use AI ethically, we at Vancity Investment Management have signed the investor statement on ethical AI from the World Benchmarking Alliance. So this is one of the key, the newer areas of engagement that we're involved in. So what this statement does is it encourages companies to develop and publicly disclose a set of ethical principles that guide the company's development, deployment, and or procurement of AI tools. In short, it asks them to list out principles and guidelines of how they're going to use AI and to acquire AI tools responsibly and ethically. And as a signatory to the statement, we've signed on as supporting investors on engagements with Microsoft, Adobe, and Broadcom. Now, last week, Microsoft, just publicly committed to guard against the creation and spread of AI-generated child sexual abuse materials. So that's a very positive step and is a very important step to safeguarding how AI is going to be used ethically and not for any malicious purposes. And this is the type of change that we like to see as investors, as SRI-minded investors. Work in this area is rapidly evolving, and we're happy to take part in it. And we'll certainly update our members as more developments kind of come out. So we're happy to take any questions at the end of the presentation, but for now, I'm going to pass the presentation to Charan to talk about how to invest in the AI theme. Thank you.
Thank you, Edmond. Very excited to be talking about this. As Edmond mentioned, we did a similar presentation a little while ago, and we had less time. And this is a topic that I could probably chat about for hours and hours. So I'm happy to have a bit more time to chat with you. I won't take hours and hours, but it's a very broad and important topic, especially in the investment industry right now. And it's something I'm going to try my best to give you the nuts and bolts about why it should matter for investors. So why should it matter? So when we think about the investment industry, like a lot of times we talk about like major themes in the market, and AI was the dominant theme in markets last year. It still remains the dominant theme this year, and it's a bit surprising to me because it's not, if you're, for those of us in more in the weeds in the industry, we've been talking about some of these matters for for a number of years. Many of these AI tools, like I've been privy to some demonstrations by not even the big tech companies, but some business processing companies that have shown some interesting tools that they've used and to automate back office functions, to analyze lots of documents or data analytics. So we've seen these tools in action, but what happened not last year, but in December 2022 with OpenAI and ChatGPT, it was really like the public unveiling of a really advanced and accessible AI tool. I think of it, it was kind of like they unveiled like a weapons grade AI technology, stuff that was being worked on probably in research and development departments, but maybe wasn't quite ready yet, but they jumped the gun. And what that did is, in my mind, it's kind of sprung this arms rush mentality amongst the big tech giants. And we like to think of it as at the start of a new hype cycle. And when we when we think about that as investors, the immediate impact was felt on some of these companies that make advanced computer chips for this technology, or some of the big tech leaders out there, the Microsofts and Googles of the world. But what happens with these big transformative themes in the market? Wall Street loves to never lets facts get in the way of a big story, and the investors start to extrapolate like how far the impact of AI is going to go, and that's what really sets off the hype cycle. When we think about AI, like you can't talk about AI without talking about NVIDIA, which is the maker of these advanced graphic processing unit chips that really, the way to think about it is like they supply the raw inputs for this AI boom we've been having. So their business that sells these chips to the data center segment has gone from roughly like a $16 billion run rate business to approaching kind of $80-90 billion annual run rate business. And historically, when we see these step changes, like they're obviously interesting, like wow, what's happening here, but they're also sometimes very hard to maintain. And while NVIDIA has been the poster child for the AI boom, you really have to think about who are the customers and what are the investment implications of that. In that case, 40% of these of sales are to the big tech giants. So it's the Microsoft, Google, the Meta or Facebook, as we would commonly know it, and Amazon of the world. And the investment implications that we really think about is that these companies are going to be spending billions of dollars here. They have to see, they're public companies as well. They have to see a return on their investment. So as much as NVIDIA is seen as the kind of poster child, they need these big tech giants, and these big tech giants need to find feasible products to develop and get in the hands of consumers. And if you take it down one more layer, like larger enterprises are still really trying to figure out how to employ even some of the previous generations of AI technology, let alone the next greatest things in Gen AI. So that's kind of how like the layout is. Like we're still in the early stages, and we're still trying to figure out what can be feasibly and profitably done with this technology. And so I mentioned as before, so December 22 was kind of the kickoff and the explosion in interest in ChatGPT, and some of these research brokers that we subscribe to have really been tracking the monthly visits to the site. And there was an initial explosion, but we've seen it start to flatten out recently. And according to the U.S. Conference Board, they did a survey of U.S. workers. Many workers have experimented with the next generation tools like ChatGPT, but or Google's Gemini, but they're only using it occasionally, and that's because there's a lot of still many hurdles to adoption. And I don't know how many have experimented with the tools. They do some really cool things. I like to think of it as like the world's smartest co-op. You can give it some instructions, but you always have to iterate and keep trying to fix what's been produced. And naturally, given like the potential societal implications, the U.S. government has started to track the data as well on how many firms are actually using this technology, or how they broadly define AI. Not just the next generation stuff, but right now we would look at kind of formal adoption. To simplify, it's really the latest and greatest kind of tech tools being used by the latest and greatest tech companies mostly, and we're still seeing the early stages of adoption across other enterprises. According to the U.S. government data, only 5% of companies have formally used any form of AI to produce goods and services. Although it's 2 to 3 times more likely in tech industries and in certain professional services. And like I said before, like mostly still tech nerds using the latest tech tools. But we're seeing the initial use cases, in things like document analysis or data analysis. The next generation stuff is being used to improve on chatbots and really customer service, call center type businesses. That's where we're seeing the potential early stage use cases. And also for things like in content generation and marketing, and things like video editing. That's where the initial use cases are really really more acute there. But overall, as you see on the next slide, most businesses are still need some convincing, or I think are still going to need some convincing over the long term on how to implement these tools. And like I said, despite the hype on the ground, like typically technology takes much longer time to proliferate in general business, and this is businesses of all types that were surveyed, from the smallest businesses to larger corporations, and we're still in the early stages. And the hurdles are pretty evident. There's a lack of familiarity, knowledge on how to use these tools, security, and concerns, as Edmond has alluded to as well. And some simply don't believe the tools or any of these tools are really applicable to them. And overall, as investors, like I still firmly do believe that there's a lot of potential here, but we worry that there's going to be a lot of money being spent by some of these companies on some of these tools that may not gain a lot of adoption quickly. So as I was mentioning, Wall Street loves these promising mega trends and investment themes. And as an investment professional tasked with kind of prudently managing people's money, we try to employ like a mental model or framework on how do we kind of break down this complex theme. And you might have seen this chart. It's the Gartner hype cycle chart by IT advisory firm Gartner. And it's kind of a graphical representation of the maturity of a new or groundbreaking technology, and it goes through kind of like 5 key phases: an innovation trigger, the peak of inflated expectations, a general the curve down of disappointment, and then actual adoption, and where the real use cases start to develop. And why do we use this type of albeit simplistic kind of framework? Well, generally it works, and may not be like entirely scientific, but we see this general pattern over and over again. And it's in tech focused things like if you look at the early 2000s or and late 90s tech .com bubble, even with the telecom and fiber build-outs in the late 90s and the early 2000s as well. Smartphones, cloud computing, Internet of Things, blockchain, or even other things that are not technology related, like the shale boom. COVID beneficiaries, we all remember stocks of Zoom and Peloton flying through the roof. Electric vehicles or marijuana stocks seem to follow the same cycle, where there's the new development, there's a lot of excitement, expectations really get out of control. And what it is, it's really a good old-fashioned capital cycle. Investors and the companies themselves have that FOMO. They don't want to miss out on this this potential secular growth trend. And what it does tend to lead into is a lot of companies rushing in and trying to capture this hype. And ultimately, there's usually a phase of disappointment afterwards, when initially the initial versions of the technology or the initial phase of the boom doesn't really live out to expectations. But that's usually another good time to be investing as well. And as I said, there's a good quote out there. It's sometimes it's falsely misattributed to Bill Gates, but it's actually a computer scientist, Roy Amara, and we tend to overestimate the effect of technology in the short run, and underestimate the effect of technology in the long run. I think that's a really good framework to how to think about AI in general. We do believe it's something and will be impactful for society over the long term, but predicting how it unfolds, how it will ultimately unfold is going to be difficult. And when we look at the hype cycle, there's really, it might be overgeneralizing it, but there's kind of 3 key zones. Like if you are early in the innovation trigger and you're early to identify these trends, that's great. But what ultimately happens is that when the hype cycle really kicks off and you get into that peak of inflated expectations, where you start to see lots of media articles, every company is mentioning AI, even if they have really low connection to it. You're talking about a market opportunity in the trillions of dollars, and you see this really kind of this overly exuberant excitement. That's when you really start to get worried as an investor. But ultimately, when there is if we think AI is going to pan out in a similar way to kind of the tech innovations of the early 2000s did, and it is going to be something, there's going to be a long-term time frame to invest in this. Like as we kind of navigate this maybe a era of peak inflated expectations, if there is disappointment, and if it is a truly great technology, there's always going to be a long tail of opportunity to be involved. Already we've been hearing about that, if we think about the phases of industrial revolution, starting off, early, late 1700s, 1800s, of steam power, and then getting into the late 1800s with the advent of railroads and electrification and the first major factories. And then the start of the initial digital age and the more advanced factories, while getting into kind of like the Industrial Revolution 4.0, the digital age, which I still think we're in. People are already saying AI is the kickoff of the Industrial Revolution 5.0. And that might be the case, but we like to think that before the AI centered marriage of human and computer technology and all these great things that can happen with it, we still have a lot of work to do in the Industrial Revolution 4.0. Like digitization of businesses and even government institutions is still, I would say, relatively early. We still have a lot of work to do there. And that's one of the key takeaways when we see people talk about these like major innovation phases. We have to think about like how this era of rapid change will impact us in terms of our ability to forecast as investors. When we talk about these major changes, like if we think about the industrial revolution in the previous phases, like those technologies have generally been have gone through their innovation phase. The technologies are they're not really changing anymore. Think about stuff that goes into kind of major factories, valves, plumbing equipment, steam traps, things that were revolutionary maybe 100, 200 years ago. Those don't really change anymore. They're really hard. They're easier to predict. When you get into like the newer waves of industrial innovation, when you have rapid change, it always means your predictability is limited. And that's what we think about a lot as investors, is that, how do I think about this industry or this business? How much, with a reasonable degree of ability, can I predict, is this business going to be the same in 10 years? You can do that for a lot of industrial businesses, but with technological businesses, especially with an era of with AI accelerating change, it becomes really, really hard to forecast like where this business might go in 5 years, 10 years, even 2 years, right? It's going to be so rapid. And what does that mean for us as in our portfolio when we think about some of these names that have been impacted by this theme we have in the market right now? And as we navigate the current environment, it's not dissimilar to how we navigate any investment environment. It's always weigh the risks and the rewards. And I do think with relative to the other, if you want to call it a hype cycle, AI, the bullishness and caution are not mutually exclusive. Like there is something here, but you have to know your limitations, and you have to be aware of the kind of the fear of missing out and jumping into investments that are only basically levered to one trend. And what we've been spending time doing with our portfolio is kind of assess how the current hype surrounding AI has affected our investment holdings to hopefully to the positive, and ensure that the portfolio is not overly exposed to just a singular growth trend. As I mentioned before, like if we think about the industrial innovation, we still have a lot to do in the digitization phase, and that's where we were really centered on as well. And AI adds to that optionality. It's just adding on to what we think is the long-term growth especially in the tech and software industries. So we think about some of our AI-linked holdings, like naturally in our kind of flagship global equity portfolio, we have a lot more exposure there due to kind of holdings such as Microsoft, Alphabet, the parent company of Google, Amazon, ASML. So we have about, I think, 26% of our names are directly linked to AI themes, either AI leaders or very strong beneficiaries of the theme. And in our small cap portfolio, it's naturally going to be less exposure, but you can still find it. It's more difficult, and you have more indirect links with the smaller companies. And overall, when we think about it, how it impacts our portfolio, it has to be in a way that's congruent with our style of investing. Investing in high quality businesses that had strong long-term secular growth, even before AI became the topic du jour. And AI adds to that long-term optionality. I think Microsoft is a good example. We think it was it's one of the best ways to kind of play the digitization theme overall. And IT spending as a percentage of global GDP is about 5%, but it grows much higher than regular GDP growth. And that was a trend that was in place even before we started talking about AI in 2022. Like software was eating the world was a theme that we were talking about, for 10, 15 years. And we think there's still so much to do in just general digitization, and AI just adds to that attractiveness. But we have to be careful about the hype around it and what's going to be realistic. So we think about like mapping out the AI theme, and it's going to be difficult to predict this, but it's generally, people have kind of decided on it's like three kind of core groupings. The primary ones are the initial, I would say, the core infrastructure. So the people that are developing these AI models, or they have a large user-based platforms, and the core infrastructure making the chips. So these are the Microsofts and the NVIDIAs, the Googles and Amazons of the world. So they would be the first bucket, and they should benefit across how this theme develops over time, right? And maybe now we're kind of getting to the next stage. This is the other supporting infrastructure and the leading businesses that can incorporate AI into product offerings and actually boost revenues. This might be the Adobes of the world, other businesses we're not invested in, such as the Meta, or even Google with their incorporating their AI Gemini tool into search. Finding a way to monetize it, and it's generally going to be the big tech leaders. And the other, on the kind of the supporting industries, we think about the IT services and distributors, the Accentures of the world, or the value add resellers that are actually selling these software products to enterprises. They should be beneficiaries. And then you start as you kind of start peeling the onion, you start to think about cybersecurity and data centers. But as you further you go, you get less direct linkages. And as you get into the next stage, and that's where like a lot of excitement is centered on. It's the widespread adoption and the massive productivity gains that can be had from some of these tools. And we're not quite there yet, but that's where where we have lower confidence, and it's much more. We have to have much more caution when evaluating companies that are exposed to those types of themes, because that's still, I would say, decent ways into the future, and the linkages there are tenuous. But we are seeing, especially companies in the financial services and healthcare, starting to adopt some of these tools for really good productive outcomes. So, and the hype cycle is going to play out. We are starting to hear some, that it is this. You think about AI, it's a multi-$100 billion opportunity, and you can kind of wrap your head around that. But when we start to hear numbers where it's like, oh, this is going to be a trillions of dollars industry, and we had NVIDIA say it was a $100 trillion market opportunity, and your red flags go up, because that's global GDP, and it's kind of, those numbers start to seem nonsensical. So you have to start to get rooted back in what's a reality. Who are actually going to be the players that are going to bring this theme to broader kind of societal adoption. And also as SRI focused investors, we have to think about what's the intersection of ESG themes and AI. And one thing we've been thinking about is how does AI expand or open up more ESG and SRI investing themes, beyond the ones that are more commonly cited. And as a firm, we like to think about the linkages to the UN Sustainable Development Goals. And I think in the future, as AI tech really matures, we should see it open up more investment opportunities in solving really large, kind of complicated issues. Particularly in areas such as healthcare, agriculture. We're already seeing some early deployments there. Not quite strong investable opportunities, but that's an area of promise. And I should add, power as well. Power, utilities, and even renewable stocks have not really responded to the AI excitement around AI yet. Even though there's a lot of thought pieces and media articles so far about the potential huge increases in power usage. We really want to, as SRI folks investors, we really want to know what role are renewables going to be in powering these massive data centers that are going to be used for this this technology. So that's another area we think about, and education has been highlighted as well, in increasing access to ease and access of education through AI tools. But that's where we think about whenever there's a new major large secular trend, like how does it open up new investment opportunities that we can think about that are linked to ESG and SRI. So in summary, I've talked a lot, and hopefully there's can have been able to distill some information for you. But AI remains a focus theme for the market, and I do think it's going to be the theme at least through 2024 and maybe into next year. It's seen as essential to the next phase of industrial innovation. I would say there's still a lot to be done in terms of just basic digitization before we even move on to the next stage. But that's what people are really seizing on right now. And I would say compared to other hype cycles, we do think you can be bullish about this. This isn't, I would say, blockchain or things like the next IoT, where there was a lot of promise on we would have 5G internet linked factories, and every toaster and refrigerator would be linked to their internet. This is actually, I think, an investable theme, or something that is going to have major impacts. But caution is always warranted with this, because there's always a lot of over exuberance. And when we think about it as investors, like we're going to continue to look for high quality companies, and then we look for companies where AI adds to the long-term optionality. We don't want to be just centered on AI as a theme. We want companies that are only exposed to it. We want companies that are strong on their own, have other strong trends supporting them, and what this adds to that long-term attractiveness. And that's it for me. I'm happy to have any questions for either myself or for Edmond.
So thanks, Charan. Thanks, Edmond, to both of you for the presentation. And right now we're going to open up the questions to the individuals who are watching. So if you look up above, you will see a little button that has the question mark and the Q&A button. Please hit that, and then you are welcome to enter your questions in. While we're waiting on the questions to come in, one of the things I think it's exciting to talk about AI, because I think we've all been watching, if you watch the news, watch social media, you hear how AI is going to change everything. And I've had the ability to experience it from using ChatGPT for planning trips and things like that. But I think it's really important to hear some of the message that both Charan and Edmond were saying. And I think, one of the other parts to it is the engagement work that we do at Vancity Investment Management. And that's that holding companies accountable. It's being able to go to the companies that you're investing in to make sure that the changes that coming in, that you have a say in those changes, that we have a say, that we are able to precipitate some of that change. So I would encourage the individuals on the call to be also asking that question around, where are you putting your money? Because it's an important part to this. It's not just about the companies you invest in, but the people that you work with, the organizations that you work with to invest that money, because that engagement work is so crucial as we go forward. So we did have a couple of questions that came in ahead of time. And so I'll pose the first one, Charan, to you. And you had, I think in the summary, it's a great little part down at the bottom talking about continue to look for the high quality companies that are out there. But maybe you can talk about, from that point of view, when you're looking at, and you mentioned the hype, how can investors make sure that they don't get caught up in that hype and get too far down the road of going and investing in that thing that their best friend told them about? What is your opinion as a portfolio manager on how you can keep that discipline? Because that's something that you have to do on a regular basis.
Yeah, I get this, question a lot, and ultimately you have to be unemotional. And as much as my wife criticizes me for not expressing emotion, I think as an investment professional, you have to be unemotional about this. I do get excited about investments, but you always have to be centered in the numbers. And I think being centered in your valuation and your numbers and your knowledge, that's really and it sometimes just comes down to like logical common sense when you start to hear these numbers, as I was talking about, where people are talking about this trillions of dollars opportunity, and you think like, okay, like how does that actually unfold? Like those are big numbers you're talking about. You're just saying things without actually understanding the implications at that point. So you really break it down. So we think about maybe like a company like Microsoft. So we know on their and right now they're really only making money off the AI segment in their cloud platform. So facilitating other enterprises to train models and things like that. The opportunity if you think about what we're more familiar with as users, like the Microsoft Office suite, that's about, I think, roughly approaching 400 million users globally. And you think if they can, they have these tools out there called Copilot that's already being used in the coder community, but you start to think you start actually making some calculations of like, okay, well, there's 400 million users here. If they can charge, an extra $20 a month, so $240 a year, 96 billion dollar business potential opportunity there. Like that's the kind of work that you have to do rather than, like a lot of times, and and I've been guilty of this in the past too, in my younger days, where there's this exciting theme and you just want to jump on it because it's going to change the world. But you really have to think about like how does it actually unfold from a business sense, and that's where even as a rather than even thinking about it as an investment analyst, you have to think about it like how you would actually have to operate this business and all the stuff that has to go on in the real world for this trend to actually come to fruition. And some of the things we've been talking about with AI and data centers and power usage, and there's all this hype about investing in this stuff, but we have to think about one, like, can these companies get the permits and the power necessary to actually develop these data centers? And then two, like, and we're starting to see this is like all this money that Microsoft and Google are spending, like, are they actually seeing a return on investment yet? And we're starting to see some, some early signs of that, which is promising, which is much better than other previous hype cycles. But those are the kind of the steps that you have to take. Is like separate yourself from kind of the excitement and start to really dig into like the logic behind how things will unfold.
Great. Thanks, Charan. So, Edmond, we do have a question that's come in and that I think would be best for you. So we know when the work that you and the environmental social governance team, the ESG team do at Vancity, that you have to go through, and Charan and the team do as well. You have to go through so many documents about a company. How is AI being used from an ESG point of view to be able to go through on some of the disclosures that companies are doing or some of the work that companies are doing in that regard?
Yeah, so that kind of goes back to the one of the use cases I was mentioned in the presentation of trying to reduce complexity in decision making and trying to make predictions. So right now we do have a few tools where we kind of do use a little bit of AI, but ultimately it's not something that it's not going to be smart enough to just feed in information and then have it make a decision for us and say this is low risk or no risk. It still requires a sort of human to be looking at that information. So I'll give an example of that I think is a very good comparison. Is sort of this example of freestyle chess, where if you have a human and a machine sort of working together, and the outcome is much smarter and much more productive than either a human alone or a computer alone. So that's kind of the way that I see AI, rather than a replacement. It's more of an enhancement to the process. That's sort of the usage that we're seeing right now, and that's what other people are using in our field anyways. And then the other thing that I mentioned earlier is using it to extrapolate better estimates. That's still, from company to company, the quality of the estimates kind of vary. And in the past, you sort of just take an estimate of what's being disclosed across the sectors, across the industry, and then take an average of that, and that becomes your estimate. Obviously, that's not very good. But what AI can do is sort of take in the information that's actually available, pick out what's relevant, and then do some calculation and extrapolate and screen out certain things. So it helps in filtering news, it helps in synthesizing information, and then helps with sort of providing estimates and giving a more overall higher quality of output as we're able to do ourselves.
Great, thanks, Edmond. And I think you're right when you talk about the use of it and still having to have the human touch to it as well. I think that's a great example internally within Vancity is the use of our Vancity Advice Plan. We actually have an AI component in the Vancity Advice Plan that helps with the financial planning for our advisors, helps our members to be able to look at different scenarios, but it still needs to have that member sitting across the table from the advisor to understand what the goals are for our members and where they want their, how they want to save for education or for retirement. But AI is a tool to be able to help us within the Vancity Advice Plan. So a little call out to any of our members online. If you haven't had the opportunity to sit with one of our advisors